We are watching one of the most violent tug-of-wars in stock market history unfold right now. I'm talking about a market that can't decide if we are on the verge of a recession or the start of the greatest productivity boom the world has ever seen. Now, yesterday, the bears were taking a victory lap. They were screaming about tech spending and a crypto collapse. This wasn't just a dip. This was a full-blown liquidation event, and it has wiped out trillions of dollars in market cap in just a matter of hours. So we are witnessing a triple fracture in the market's foundation. The labor market narrative is breaking, the AI infinite growth thesis is being questioned, and geopolitical stability is evaporating. And on top of that, the emotional toll of seeing your gains from late 2025 disappear in just a couple sessions is pretty brutal. Now, panic is a luxury we cannot afford. So let's break down what's happening in the markets. But first, a quick reminder, this is not financial advice, so please do your own research. The Dow Jones just smashed through 50,000 for the first time in history. And that is a psychological barrier that we have been watching for months, and we finally tagged it. Under the surface of this rally, there are some very dangerous currents moving around. We have big tech spending money like it's going out of style. We have geopolitical tensions in the Middle East that could flip the oil market upside down in just an hour, and we have Bitcoin acting like a leveraged penny stock. In today's video, we're breaking down stocks, options flow, and the technicals. But before we dive into the charts, I need to connect the dots on the news for you, because the headlines you're seeing on CNBC are not telling you the full story. If you looked at your portfolio on Thursday, you most probably saw a complete sea of red. Amazon dropped, Meta was shaky, and the narrative was all fear. Why is that? It's because of one word: Capex. Capital expenditures. We got the earnings reports from 4 of the major companies: Amazon, Alphabet, Microsoft, and Meta, and they dropped a bombshell on Wall Street. They're planning to spend over $650 billion on AI infrastructure in 2026 alone. $650 billion. Now, to put that into perspective, that is bigger than the GDP of most countries. Now, normally when companies spend money to grow, investors are happy. But yesterday, the market panicked. They looked at that number and said, hold on a minute. If you're spending that much on chips and data centers, what is that gonna do to your profit margins? Are we just burning cash in a furnace hoping that AI pays off? And that fear triggered a massive sell-off in the Nasdaq on Thursday. People began rotating out. They were dumping the big spenders, and then after that, we got a recession-style spike in job cuts. 108,000 layoffs in January alone, the highest since the Great Financial Crisis in 2009. Now, fast forward to Friday, which is this morning. The narrative flipped on a dime. Nvidia and AMD stocks both surged about 8% while everyone else was worried about their spending. The market realized that one company's expense is another company's revenue. So we're seeing a bit of a split in the market here. The companies that are buying the shovels are getting punished for spending too much, and the companies that are selling the shovels, that is semiconductors like Nvidia, are still rallying and doing pretty well. And this is critical for you to understand if you are trading AI stocks moving forward. You can't just buy tech anymore as a basket. You need to pick and choose. You have to know who is the spender and who is the receiver. But it's not just all about AI. We have to talk about the geopolitical situation, because this is the silent killer that could ruin the party for everyone. For the last few weeks, we have been watching oil prices creep up slowly. There has been a lot of fear about supply chains in the Middle East, specifically the tensions between the US and Iran. And yesterday, there was a rumor that things were escalating, and that pushed risk assets down even more. And then after that, we got news that the US and Iran agreed to hold talks. Just the headline of talks was enough to pull oil prices back down. And when oil prices drop, that makes stocks pop. The market is terrified of an inflation resurgence. If oil spikes back to $80 or $90, gas prices go up as well. And that means higher shipping costs, and then the Fed has to step in and keep the rates high. So the fact that these talks are happening today is actually a massive green light for the bulls. It removes that immediate risk of a supply shock in the oil markets. But keep your eyes on this. Geopolitics is the one variable you cannot chart with technical analysis. It happens overnight and it gaps the market down. Now let's talk about the jobless claims data. 231,000 initial claims, and that is higher than expected. Normally, bad news for the economy is bad news for stocks, but in this weird environment we are in, bad news is good news. Because if the labor market is softening just a little bit, it gives the Federal Reserve permission to cut rates, or at least not to raise them for the time being. So when that number came in a bit hot, it actually helped the bid on bonds. Yields on the 10-year treasury cooled off a bit, and then when yields fall, growth stocks can breathe again. And then there's the absolute carnage that happened in crypto. If you're trading Bitcoin or any crypto proxies like Coinbase or Strategy, you probably got some whiplash because Bitcoin flushed all the way down to near 60,000 on Thursday, and that was a brutal 25% correction for the single week. So we saw over $1 billion in long liquidations and the leverage just got wiped out. But look at what happened in the last 12 hours. We bounced straight back up to over 70,000. The market flushes the leverage out, it scares the weak hands, and then rips right back up to leave everyone behind. But here is the connection to the stock market. When Bitcoin crashed, it dragged down the sentiment for everything. It made people go even more risk averse. When it bounced today, it gave the green light for risk-on behavior in equities. The correlation between crypto and high beta tech stocks right now is super tight. So how do we fit all these pieces together? What is the big picture here? We are seeing a rotation. For the first time in a very long time, the Nasdaq is actually lagging year to date compared to the Russell 2000. Small caps are waking up. Now, why is that? It's because if the economy is holding up and the Fed is done hiking, then smart money is looking for value. It is looking for things that haven't run 500% in the past 2 years. And the Dow hitting 50,000 is proof that the rally is broadening out beyond just the Mag 7. And that is actually a healthy, broad type of market growth, as opposed to the crazy semiconductor rallies that we've seen in the past. So as we go into the charts today, I want you to keep this narrative in mind. The dip buyers are still here, and there is a mountain of cash on the sidelines waiting to deploy. But they are getting very picky, and they aren't just buying everything blindly anymore. They are punishing companies with bad margins like we saw with some of the software names. And they are rewarding the infrastructure kings like Nvidia and the construction plays. So are the whales buying this dip, or are they selling into this rip? And the news cycle is moving really fast and the geopolitics are fragile. Let's take a look to see what happened on the options flow and on the charts. So let's take a look at the options flow. First, we are going to take a look at the flow overview. On the bullish side, the money coming into calls mostly on Nvidia, Amazon, Tesla, and MicroStrategy. And on the bearish side, we have shorts coming in on Micron, and it makes sense because it's been running for a long time here. And then after that, we have some shorts on Meta, and I believe this is First Solar. Now let's look at the gamma exposure on the SPY because this is very telling. This is our spot price here at 690, and we are right at the call wall. On Monday, if we break through this call wall, I think this will start shifting up, and we're probably going to go and try and take out that $700 level. On the downside, where the puts are, you're seeing here it's very thin. We still have a little bit here at 675, but that's about it. So it seems that the big money has pivoted towards the long side. Now, the million-dollar question is it all up from here, or is this just a bounce before we go crashing back down? Now, switching over to the charts, let's first take a look at the S&P. I've been saying in the past couple videos that we are in a channel, and when you are in a channel, You want to sell the tops and you want to buy the bottoms. However, what happened was we actually broke the channel and we struggled to get above that day, and we closed pretty low outside, and that was very unnerving for a lot of people. When a channel breaks to the downside, that means it might roll over and roll over hard. Our target would have been almost about 663 to the downside. Considering that today we bounced through this, we broke through the lower trend line and we broke through this point of control. So now we can expect this to act as our support moving forward. If we get a pullback early next week, no problem. This is an area to buy the dip. If we get to come back for a retest and start bouncing, even better, because when you get in on the bottom of the channel, that is your greatest upside to the top. If you try and get in here, it's a little risky. This is your upside and it may not make it all the way to the top. It may start chopping around like this. And if you're holding long enough, especially if you're an investor, it doesn't matter. You want to be buying the dips and not buying into the FOMO up here. Looking at the triple Qs, we have this zone up here, which is our next area to tackle. So we came above the trend line as well. This is a long-term trend line extending all the way back to July or August of last year. So if we just start hugging this trend line and then we start bouncing, fantastic. If either the SPY or the triple Qs begin to roll over and go outside the channel, I'm not going to take my chances. I'm either going to close out my longs or I'm even going to flip on the short side, because sometimes you will have a big drop. You'll have the relief rally when the shorts are covering, and then you begin to roll down afterwards. So that's what we gotta watch out for next week. So we still have to keep watching those trend lines. Let's take a look at a couple stocks. First off, Amazon, it had dipped all the way to about $200, and then we got this bounce today. We have a gap here and we have a gap here. So Amazon has some work to do to the upside to fill these gaps. It's a really messy pattern to trade something like this, so I'm staying away from it, letting the dust settle. Nvidia, so we had this trend line here slanted to the upside and we had this point of control and we broke through both today. Our upside target here is about 193, where we have this resistance. Our support that should not break, and if it does break, get out of it, is about $180. If we can take out this resistance line here, then we can go for the highs. AMD, and if you were watching the past couple of videos, you know that I took my first trade on AMD up here along and it didn't work out. We had this crazy flush out and those calls got smoked. I decided to take a second swing at AMD here once we got to this green trend line. You'll see that we have 1, 2, and 3 points of control. And here, even though it extended below it, it's quickly snapped back. And now we have this gap to the upside. TSM, this one, I saw a bunch of calls coming in on the options flow as well. And you'll see that it is in this range. And we need to break this top here, and then we could see a move up to 365 or 378. If it begins to pull down again, then that may be a spot to reload for the long. However, I don't want it to cross this 21 EMA. I want to see the EMA move upward, have it pull back, and then take the long up to 365. Tesla, this one is starting to look really appealing here because we have come down to this long-term support zone and we got to bounce off of it. However, we are still in a downward channel and we need to see that reverse to the upside. Now, our first area here is this green line. This was support back here and it played a role in this chop. When we tried to get above it, it struggled. And guess what? We're back at this green line. And I put down this line actually a day or two ago, and you'll see that it actually reacted off of it. It came up to it and then it pulled back. So the question now is, can Tesla get enough steam to break through this red line here, this point of control? And if that happens, fantastic. Then I'm going to go heavy on this because I think that Tesla is setting up for a move to maybe 500 or 520, but we have to take out this zone first. Now on to some crypto related stocks, because like I was mentioning earlier, they have been beat down so hard it makes sense to get in here because the risk reward is at a really good ratio. So if you see here this support zone we had, this bounced off of it once, twice, and this is the third time bouncing off of it. So buying here, this is your downside to this area just below the box, and your upside is about here. This is our point of control, roughly around 248, and there's a little bit of resistance here at about roughly 238. So I haven't gone in on Coinbase yet. I'm waiting to see what happens on Monday. I did buy a leveraged 2x ETF on Solana, and this is not about what I think of the crypto market, what's going to happen with this specific project. It's just about catching the rebound right now. Now, you could try names like MicroStrategy, but they're not doing so well. Especially, MicroStrategy is just, people have given up all hope on it. I would stick to more ETFs or actual crypto if you want to buy. And right now, there is more blood in the streets in crypto than any other sector out there. And I think it's gonna bounce back eventually. So the one I was looking at was Chainlink, and you'll see here, kind of similar to the Coinbase chart, we have this area down here that is our support. We had one point here, we had one here, and then we also have this trend line up. So this is really beat down, and your downside on this is maybe 35%, but your upside is about 200%. So the way I'm looking at it, I'm catching this here really at the bottom. If I can just catch a move back up to the point of control right here, that's about 59%. And then getting into a leveraged ETF like SOLT, and you got to know, like with these leveraged ETFs, there is a little bit of decay over time, so you have to watch out for that. But when you're buying at the bottom and then it begins to rebound, your gains begin to compound to the upside. So if this begins moving, I think I can make a decent chunk of money off of it. And last but not least, let's talk about Palantir, because this one faked out a lot of people. Right here, we came down, and then I believe this was earnings, and then we had this move to the upside. It faked people out, and it even held the support, like it came down below the support and then it wicked above it, and then it flushed again. So it trapped a lot of longs there. It was pretty nasty. I had stayed away from it because I didn't want to play earnings on Palantir, but it really didn't catch much of a bid on Friday. So I'm thinking on Monday, this might be a good play. This may have a move back up to this $157 area. So not bad risk reward. And then for the downside is about 120. I think this is where it would go to, but if it can break this zone here, this blue line, it can still go up back to 178. I'm thinking that a lot of these tech stocks are going to start moving again, and Palantir definitely has a lot of news going for it. Now guys, this channel is only a couple months old. If you found this information helpful, do me a favor, hit that like and subscribe button so you can help this channel grow. Take care guys, enjoy your weekend, and I will talk to you soon. Peace.